Welcome back to the Financial Works YouTube channel. Today, we're diving deep into a fascinating topic that's essential for every trader: understanding market dynamics. Whether you're a seasoned trader or just starting, this knowledge will be your guiding star. Let's set sail on this enlightening journey. The complexity of markets. Imagine you're exploring a bustling city for the first time. The streets are filled with people, and each person has their own story, their own agenda. In the trading world, markets are like those busy streets, teeming with participants, and every move matters. To put it simply, a market is where buyers and sellers come together to exchange assets, whether it's stocks, cryptocurrencies, commodities, or currencies. But markets are not static. They're dynamic, constantly shifting and influenced by a multitude of factors. Supply and demand, the foundation. Imagine you're in a marketplace with vendors selling apples. If there are plenty of apples but few buyers, prices tend to be lower. Conversely, if there are more buyers than apples, prices rise. This basic principle of supply and demand is at the heart of market dynamics. In trading, when more people want to buy a particular asset than sell it, its price goes up. Conversely, when more people want to sell than buy, the price goes down. Understanding this fundamental concept is like having a compass in the trading world. Market participants. Markets are like theaters with various actors playing different roles. Let's meet some of the key players. Retail traders. These are individual traders like you and me. They buy and sell assets for personal gain. Institutional investors. These are big players like hedge funds, mutual funds, and pension funds. They manage large pools of money on behalf of their clients. Market makers. They are like intermediaries. They facilitate trades by buying assets from sellers and selling them to buyers. Market makers help maintain liquidity in the market. Regulators. Think of regulators as the city's police force. They establish rules and oversee market activities to ensure fair play. News and events. Just as city events can influence its dynamics, news and events impact the markets. Economic reports, geopolitical events, and company earnings can all have significant effects. Market analysis. Understanding market dynamics requires analysis. Think of it as studying the city map before exploring a new place. There are two main types of analysis in trading. Technical analysis. This involves studying charts, patterns, and historical price data to predict future price movements. It's like using historical weather data to forecast the weather. Fundamental analysis. This involves evaluating the underlying factors that can influence an asset's value, such as a company's financial health or economic indicators. It's like examining the city's infrastructure and economy to understand its growth potential. Market volatility. Just as cities can have calm days and chaotic ones, markets can vary in volatility. Volatility measures how much and how quickly an asset's price changes. High volatility means prices can swing dramatically in a short period, while low volatility suggests more stability. Understanding market volatility is like knowing whether you're exploring a quiet town or a bustling metropolis. Long-term versus short-term. Traders have different goals and timeframes. Some are like tourists who visit a city for a short vacation, while others are like long-term residents. Long-term investors typically hold assets for extended periods, while short-term traders buy and sell more frequently. Your trading style should align with your goals and risk tolerance. Are you seeking quick profits, or are you in it for the long haul? Knowing your time frame is like deciding whether you're taking a weekend trip or settling down in a new city. Conclusion. In conclusion, understanding market dynamics is like learning the language of a new place. It takes time and practice, but it's essential for successful trading. Remember the fundamental principle of supply and demand, get to know the market participants, analyze the markets using technical and fundamental analysis, be aware of market volatility, and align your trading style with your goals. In our next episode, we'll cover everything that we have learned so far but armed with the knowledge this time around. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more educational content. If you have any questions or topics you'd like us to cover in future videos, please leave them in the comments below. Happy trading!